stocks are selling off globally, with Japanese stocks having their worst day since 1987. For more on what's going on there and how it's impacting us, let's check in with Peter Boockvar. He's the Chief Investment Officer at Bleakley Financial Group and a CNBC contributor. Thank you for being here, Peter, as well.
Hi, Kelly.
Let's start with the Nikkei. We talked about this worst day since 1987, but the worst three-day move we've had since at least 1949. It's a 20% drop for the topics, at least.
The Japanese stock market benefited tremendously from the persistent weakness in the yen. Now, there are other positives that the Japanese economy has been going through, particularly corporate Japan, in terms of corporate governance, returns on equity, unwinding share cross holdings, and so on. So there was a fundamental story to Japan. But I think what this is reflecting in is how much money people borrowed in yen to buy Japanese stocks, among many other assets that are now unwinding.
And this goes back to their rate hike last Wednesday. Same day the Fed was holding rates steady here, the Bank of Japan decided to hike rates. It wasn't exactly their first rate hike, but it was one of just a couple since, what, March or so? Why did that so quickly kind of push things to the other side of the cart?
Well, it's sort of revealing itself. The Fed started raising rates in March 2022. It took the BOJ 2 years later just to get them out of negative interest rates.
Do you think they should have gone sooner?
They should have gone sooner when inflation was persistently above 2%. But by waiting, every month that went by, more borrowing was taking place in yen. It was the last place in the world to sort of get free money. And that free money, we couldn't necessarily quantify, but we're seeing sort of the result of the unwind now to say, wow, that was massive. We didn't really see it while it was going on to the extent that it's revealed itself to be, but it was obviously massive.
So here's the overnight rate, which we can see was negative for so long. Japan was trying to stoke inflation, and they had it. They had 2% of this, but they didn't move to raise rates until very, very recently. They got off of negative, as we saw in, what was it, maybe March. Then they finally hiked again up towards a quarter point last week. But it was this period that you think allowed all these carry trades to build up? Exactly,
because other central banks, the Fed I mentioned, the ECB, the BOE, the Bank of Canada, all the world's central banks are raising rates except the Japanese. So if you're a carry trade person who borrows yen, well, you're borrowing cheap, you're getting a weaker yen, and you're speculating in all these different things, whether it's Bitcoin, gold, or tech stocks. So you were making money on both sides.
Yep, and here's the yen weakening to support that all the way really here through its peak just about a month ago. July 10th was when the Mag 7 peaked. We're down 20% since then. Similar move here. The yen has gone straight down to about 144 today. What do we watch for now?
So I think we need to see this sort of exhaust itself. The Japanese market has essentially crashed. 1987, when you have crash in 1987 in the same sentence, it tells you this is rather dramatic. The Taiwanese stock market at its worst day since 1967.
And Korea, too.
And Korea, too. So I do think this is about to exhaust itself. Now, is that the all clear? I'm not so sure, because we also have other worries like economic growth and questioning the AI trade and whether tech can continue to lead the way. So this
of course,
is sort
it all has to happen at the same time.
Well, that's the thing. This all came together all at once at the same time that sentiment was extremely bullish. You had excessive levels on the technicals in terms of the S&P relative to its 200-day moving average.
You said it was about 15% above the 200-day?
Usually about 13%. It gives me a red flag.
Wow.
Got to 15%. And then, of course, the global growth concerns and questioning the AI trade and all the investment and the monetization and so on and so on. Everything came together.